You've talked about how the Federal Reserve is undergoing an investigation to determine whether the Federal Reserve actually failed in this instance. Is the Federal Reserve the appropriate body to conduct this investigation, or should we have an independent investigation?
Thank you, Senator. It's a terrific question. We describe what we're doing as a review. We're reviewing our own practices. I think it's an important part of risk management to do self-assessment. I think it would be irresponsible and imprudent of us not to do self-assessment. We're going to take that very seriously. We're going to be thorough. We're going to be transparent, and we're going to be far-reaching in that self-assessment. I also think it's appropriate for outsiders to have independent reviews, and we expect and welcome independent reviews of our actions.
And if you uncover in your investigation that the Federal Reserve failed here in some of its supervisory roles, will you make that public?
Yes, we intend to make our report fully public on May 1st, and that report will include, normally it's not our practice to include, but that report will include confidential supervisory information such as the exam reports.
And in the scope of your review, you identify the scope of that review in your written testimony. Is there anything in addition that's not in your written testimony that you will be reviewing here in that scope?
Thank you, Senator. I've asked the staff to be far-reaching. So if they determine that an issue should be in scope, they have full discretion to put that issue in scope and to address it in the review. So there are no limitations on their ability to review how the Federal Reserve conducted its supervision and the regulatory oversight of the firm.
Thank you. And then one final thing, because there's been a lot of discussion about the previous rollback of some of the regulation in votes in this body just recently. If you find that that change in the law impacted the Federal Reserve's ability to conduct the appropriate tests based on the tiering of the bank's assets, would you be forthcoming with that and say so?
Yes, we intend to describe where we think supervisory and regulatory failings occurred. If changing those to make them what we think is the right standard would require an act of Congress, we will say so in that review.
And then Chairman Gruenberg, same to you. You're conducting a scope of the FDIC. Are you comfortable that you can conduct that and be transparent and accountable, or should there be an independent body looking at this?
I think there's room for both. As Michael indicated, I think it's important for each of our agencies to look internally at our supervision of these institutions.
Hello, friends. This is important news for low-income households. The federal government is looking into how much SNAP benefits may decrease, and that's if inflation continues to decline this year. This could mean benefit cuts equal to millions of dollars nationwide. Social Security recipients may see this change as well. My dearest friends, please make sure that you watch until the end of this video. Also, tomorrow I will be announcing more winners for the Walmart gift card giveaway. If you'd like to enter this Friday's giveaway, all you have to do, friends, is subscribe to my channel, click and like several of my videos, and then comment below the keyword of each video that you watch. The more videos that you watch and then comment on, the greater your chances, friends, of winning the weekly giveaways. CNBC News has just released some new information. More than 1/3 of Americans are saving their tax refund this season, and 44% have earmarked the funds to pay off debt or their bills. Most Americans will use their tax refund to bolster their finances amid economic uncertainty, stock market volatility, and lingering inflation. Those percentages were even higher for younger respondents. A recent Bankrate survey also found that tax refunds are important to most Americans' financial situation, and that paying off debt and boosting savings are people's top priorities this year, which is similar to past findings. According to the recent survey, 45% of Americans expect to receive or have already received a tax refund this season. As of March 31st, the Internal Revenue Service has issued nearly 63 million refunds, with an average payment of $2,910 compared to $3,226 at the same point in the filing season last year. But a big question that many are asking is, will SNAP benefits decrease as inflation drops? The SNAP program is the nation's most important anti-hunger program and one of the largest social safety nets in the United States. SNAP benefits are calculated based on the USDA's Thrifty Food Plan, which states how much it costs a family of 4 to eat a healthy diet on a budget. According to the U.S. Government Accountability Office, benefit amounts are updated each year by adjusting the cost of the Thrifty Food Plan for inflation. SNAP benefit increased as inflation hit record levels last year, reaching 9.1% over the 12 months ending in June 2022, per Consumer Price Index numbers. And since then, inflation has dropped to 5.0% in March. But despite being higher year over year, food at home prices decreased in March, with the price of eggs dropping 10.9%, and the cost of meat, fish, and poultry was down 1.4%. However, decreased food costs will not lower future benefit levels. In October 2021, the USDA allowed the Thrifty Food Plan to increase beyond inflation, boosting SNAP benefits by 21%, the first increase in SNAP's buying power in 45 years, after the plan was recalculated to reflect changes in food prices, changes to dietary guidelines, and trends in what Americans purchase and eat. So that increase is permanent. Going forward, officials say the USDA is required by law to update the Thrifty Food Plan every 5 years. Between 2013 and 2019, yearly SNAP benefit payments decreased at an average rate of 6.5%. So, dear friends, what are your thoughts on this? What are your thoughts about SNAP benefits decreasing? Please let me know what your thoughts are in the comment section below. Social Security has also been the backbone of the American retirement system since it was signed into law in 1935. As early as the year 2033, Social Security benefits may be cut by as much as 23% without congressional intervention. This is due to the way that Social Security is structured. Program rules require money to come from within Social Security itself. But since a trust fund is estimated to dry up by the year 2033, ongoing benefits must then be paid strictly from incoming payroll taxes. This alone is not enough to fund benefits in full, which results in the estimated 23% drop in payouts. There are changes that the Social Security Administration could make to the program that are beyond your control. But there are 2 things that you can do to boost your future benefits as high as possible, perhaps even enough to overcome any cuts. This is because the SSA uses just 2 factors to calculate your benefit amount: your income and your retirement age. The first component, which is your income, is based on your highest 35 earning years only. So if you have worked fewer than 35 years, each year you are short will count as no income for purposes of calculating your Social Security payout. So in order to counteract any future cuts, you will want to earn as much as you can for at least 35 years. That is the end of my daily stimulus update video for this Thursday. Thank you, dearest friends, for being part of this community and for being here every single day. I will be announcing more winners tomorrow for the Walmart gift card giveaway. If you'd like to enter these weekly giveaway, friends, all you have to do is click and like several of my videos and then comment below the keyword of each video that you watch. The more videos that you comment on, dear friends, the greater your chances of winning the giveaways. Thank you and have a wonderful and very blessed Thursday.